Bitcoin dumped hard over the weekend, bringing most cryptocurrencies down with it. However, one very lovable meme called Dogecoin seems to be immune to Bitcoin price action and basically any other negative force in the world. Further, today is Dogeday, so happy Dogeday to everyone. We're going to take a look at the Bitcoin, Ethereum, and Doge charts and all of the news that's driving the markets today and see what comes next. Stay tuned. What is up, everybody? I'm Scott Melker, also known as the Wolf of All Streets. Please subscribe to my channel and go ahead and hit that thumbs up, like button right down below. Now, as I mentioned before, everybody is holding their breath, watching Bitcoin to see what the market is going to do next, but seemingly there's endless news, some positive, some negative, and some altogether fake that seems to be affecting the market. But first, I want to dig right into the charts and see what we can technically look at on Bitcoin, Ethereum, and Doge. As you can see here, we have the Bitcoin daily chart. Now, there's been a lot of panic. Obviously, we saw a relatively high volume sell-off here, although we had higher volumes on sell-offs previously in this cycle. And this is about a 20% drop from almost 65,000 down to just above 51,000. That amounts to about a 20% drop. And we all know that in any Bitcoin bull run, we have 30% and less retracements over and over and over again. We've had a number of them already this year, but that does not stop people from panicking. I believe we had 8 30% retracements in the bull run from 2015 to 2017. Everything that's happening right now is completely par for the course and normal and nothing to get worked up about yet. Further, as you can see, and I can pull this back way further, but just looking here, we have a high, higher low, higher high, higher low, higher high, which would be confirmed by a higher low here, hence the question mark, which would happen when we make another higher high. But bullish market structure is still fully intact right now unless this low is broken right here. Also, you can see here on the daily chart, this is a perfect bounce from demand. This is a good support area that you would expect a bounce from. As far as the candle structure, yes, we had this huge dip, but also had a lot of demand, a huge wick, and a ton of buying. The next daily candle was a spinning top, which shows indecision. A spinning top is when you have roughly equal wicks, top and bottom, and a small body. And then today, thus far, although it's way too early to tell, it's only 10 a.m. as I'm recording this Eastern Standard Time, so we've got about 10 more hours left in this daily candle. We have a nice potential bullish hammer with another down wick. But it's interesting to note that we have wicks down on every one of these candles, which means at least for now, bulls are interested in buying in these areas and are doing so every time that we see a dip. To me, there's nothing overtly bearish yet on the chart. This still just looks like a simple, healthy retracement. That could change very quickly if we make another lower low. Looking in on the 4-hour chart, I think that we're likely forming some ranges here. As you can see, we have the large blue range that goes from 64,899 down to 51,305, basically the top to bottom of that dip. Price struggled right here at the EQ. That's the dash line of this blue range, the equilibrium. It's the 50% midline of any range or any channel of any sort. As you can see, price struggled right there and dipped below, but we also have this local range down here after the dip to the recent highs, and you can see that price did bounce off the mid-range of that. It just depends on your time frame and how you look at it, but for now we are trading in the top half of the bottom range and the bottom half of the top range. Traders would really like to see us flip this area around 57,719 back to support and head back up to the range highs. Interestingly, we have decreasing volume since that move, so this is some sort of consolidation. You could draw all kinds of patterns here depending on your bias. You could draw an ascending triangle, which would be likely to pop to the top, or a bear pennant starting here and here, which would be likely to go down, or a slight bear flag or ascending wedge, which is likely to go down. Everyone will draw different patterns. To me, you have to wait way more candles and see what really forms up before forming a bias there. For now, I think that we're having a healthy retracement until proven otherwise. It remains to be seen, so we will be watching Bitcoin. Moving on to Ethereum. On the Ethereum Bitcoin chart, I zoomed way out to the weekly because we had this macro descending resistance. It's been in existence since the all-time highs in 2017 against Bitcoin. We did have a fake out breakout right here, dove back below. But now, even with the Bitcoin dip, this weekly candle after the dip closed really strong and right into the resistance of a potential inverse head and shoulders. We also now on this weekly candle, way too early to judge, it's only Tuesday, but have a perfect retest of this as support. Breakout, retest as support. If we can flip this line, we should be heading back up eventually to the highs. I know that sounds crazy, but this chart looks much better than the Bitcoin USD chart at the moment. Against USD, Ethereum, I don't generally trade it against USD. I trade it against Bitcoin. But you can see, I was very bullish here when people were panicking on this candle because it was a retest of 1419.96, the all-time high from 2018. Well, what have we seen here? We made another high down, flipped that high, and now have 1, 2, and 3 candles testing it as support. This last candle presently is testing it almost to the dollar at 2041.42 on the weekly lows for now. I guess it's only Tuesday. Candle doesn't close till Sunday. Hard to judge, but it's nice to see that bouncing the support. And if you zoomed in on the daily, you would see that more closely. Now let's take a look at everyone's lovable Shiba Inu, the favorite of Elon Musk, Doge. Now listen, there's no real reason to chart Doge right now because nothing that's happening is technically or fundamentally rational. I think we all know it. I think that everyone's having fun here. If you've been here a while, you've seen these cycles on Doge. I've traded them probably 4 or 5 times over the last 5 years. You get these huge pumps, then these huge dumps. You buy the bottom, you wait a couple months, it cycles up again. You sell, you buy the bottom. It's the most fun thing to trade in the world. Well, this cycle has gone a lot higher, largely due to Elon Musk and all of the retail investment in mainstream media. But you can see, I mean, this has been a bear div party. If you were just looking at the chart, which maybe will not work, you would say that this is topped. You have bear div here, then a hidden bull div here. Now you have bear divs just steadily coming down from here to here, measuring from the candle high, not the wick, by the way, the close. Bear div here, kind of descending. Maybe this will do some retracing now before it heads back up, print another hidden bull div. But I would say that technically when RSI gets this high, you expect it to travel back to oversold and cool off, which could form some sort of more bullish consolidation here. Also could give us a cup and handle with it and heading up. And now let's dig into all the news because there's quite a lot of it and it seems to be really affecting the market. I already did a full video on the Coinbase news, so we're not going to dive into that, of course, but that was completely FUD about them dumping on the market. But here we go. Let's talk about Doge. Plumber buying Doge shows retail investors power in crypto. It's a funny quote from my friend Mike Malone over at Bloomberg, who said that the recent run-up in the Doge token is exemplary of retail's involvement in crypto markets. His plumber told him recently that he'd bought in. Now, if anyone remembers anything from the 2017 top in Bitcoin, it's that all of a sudden everybody was interested in it. Everyone was buying it. It was extremely volatile. Your hairdresser was telling you about it. Your nanny was telling you about it. Your taxi driver was telling you about Bitcoin. We're starting to see a very similar thing in Doge. Also, when you look at the Wall Street cheat sheet that shows the emotions of a cycle, you get to the top, which is euphoria. When people start talking about it as a new paradigm, the new money. People are talking about Doge now as the new global currency. I'm seeing it. People talking about all the places that you can spend it. Every top signal is available. The problem is these cycles usually push a lot harder than you expect when retail gets involved. So trying to time the top is effectively impossible. But yes, retail is very powerful and is pushing this price much like they did with GameStop just months ago. Once again, Dogecoin eclipses XRP as 4th largest cryptocurrency ahead of Dogeday today, 420. Also, Smoking Weed Day is apparently Dogeday, and everybody is really, really euphoric and excited about it, and it's somewhat insane that now Doge has pushed its way up to the 4th largest cryptocurrency by market cap. And here we go, Dogecoin at 50 billion makes it bigger than Ford and Kraft. Do you think that Dogecoin should have a larger market cap than Ford cars? Probably not. That probably indicates that there's something irrational going on here, especially when we all know that Doge was literally created as a joke. Its founders left. It's run by volunteers. It's had no major updates and has no actual particular use case. But hey, man, I love Doge. You love Doge. We all love Doge. I just can't advise jumping into it at this point and think that this will end the way that every retail bubble ends. A whole lot of people get really excited. Price dumps, they hold the bag because they don't know when to sell and they end up at a huge loss when this cycles back down. I hope it doesn't happen. I hope that all of people's Doge dreams come true, but that would be a huge break from history. And on to the next story. Latest Bitcoin crash shows buy the dip mentality among big investors. There is no fear in the marketplace among big investors. It's very clear that they are buying up the spot. We've had countless narratives as to why Bitcoin dropped this weekend. From America looking into Russian wallets, not true. Hash rate dropping in China. True, but temporary. US regulators from the Treasury Department cracking down on money laundering. Completely not true. Coinbase executives dumping on the market. Also not true. Amazing how all the fake news lines up at one time for a negative story when Bitcoin dumps, isn't it? Almost seems like somebody's trying to hold the price down. But this has not affected institutional investors from wanting more. They are buying. What really happened this weekend? Let's be real. $10 billion in leverage liquidations. Retail was extremely over leveraged on high leverage. It took a very small sell order on spot to start a cascade of liquidations. So what does a whale do? They short. They sell a whole bunch of Bitcoin. It triggers more liquidations on longs, and then the cascade goes all the way down until all of a sudden they've moved price $9,000 in just 4 hours, making for an extremely profitable short. There was way too much leverage in the system, way too much high leverage in the system, and it got completely rinsed. We saw it the other way with GameStop just months ago, and everybody cheered it on, right? A huge short squeeze, cascading short liquidations leading to price going up. Well, this is a long squeeze and nothing much different. But as you can see here, they said, we believe the root cause of the sell-off had to do with investor positioning rather than fundamental news. Simply put, traders were over-leveraged and positioned long, resulting in forced liquidations. And perhaps the biggest news that seems to be going slightly under the radar at the moment is that customers on PayPal can now buy, hold, and sell cryptocurrency directly within the Venmo app with as little as $1. So you know Venmo is owned by PayPal. You can now buy $1 worth of Bitcoin on Venmo. Buy, hold, and sell. But noticeably, you cannot send. Not your keys, not your coins, obviously. But does that matter? That matters to us, the fundamental believers in Bitcoin. But your average person just wants to gain some exposure, buy a little Bitcoin and not think about it. And they want to do it on a platform that they're familiar with. To me, this is the key to mainstream adoption. And we're seeing it here over and over and over again with PayPal, Venmo, Cash App, and everybody else flooding into the space. And it's amazing that you can buy $1 worth. This is just easier access for the mainstream, for retail to buy assets that they keep hearing about over and over again. The flood of retail is coming and they're making it much easier on us. Gary Gensler is now head of the SEC. What comes next? Everybody's talking about Gary Gensler, head of the SEC and a guy who taught blockchain at MIT, a huge proponent for the space. But what does that actually mean? Well, yes, he's a huge fan of the technology, but also is a big stickler for the rules when it comes to securities. And he's one of the guys who openly said, hey man, XRP and a lot of these are securities. Here's how they describe it here. In the crypto world, Gary Gensler has been one of the most talked about figures in government for many months, despite the fact that he hasn't formally been in government at all yet. A moderate, Gensler is not likely to cut down on the SEC's work getting token issuers to toe the line, but his interest in technology and financial data suggests serious interest in updating markets. To me, this is a huge net positive. The biggest risk for crypto and Bitcoin in general is not just regulation, but dumb regulation, right? Regulation is coming whether we like it or not. And for a lot of people, that's probably a very good thing to protect the consumers. But the biggest threat is dumb regulation, regulators that don't understand the technology, the importance. And Gary Gensler does not fit that bill. He understands it, so we can expect that he will have very smart and rational regulation, or at least he will be guiding the ship in that direction. So I think it's great that we have someone who finally understands Bitcoin running the SEC. Time partners with Crypto.com to offer cryptocurrency as a form of payment for digital subscriptions. Just yet another story where a huge company is allowing people to pay in crypto. And one more, Business Wire. WeWork starts utilizing cryptocurrency as form of payment. Basically the same story as Time. Everybody's getting in line to accept cryptocurrency and to adopt it. The future is exceptionally bright regardless of the ridiculous price action and stories over this weekend. Once again, I'm Scott Melker, also known as the Wolf of All Streets. Please subscribe to the channel and hit that like button down below. And if you have Fox Business, I will be on Making Money with Charles Payne today between 2 and 3 p.m. Eastern Standard Time, talking about Bitcoin and Coinbase. So tune in for that. Until then, peace.